90 down liquidations. Trade with intuition. Don't be sedated. Manage your risk or you'll be singing this song. I got 99 liquidations. Run it!
I got 99 liquidation, but a bitch ain't one.
Let it run! Let it run!
I got 99 liquidation, but a bitch ain't one.
Yo! Slap the stop loss!
I got 99 liquidation, but a bitch ain't one.
Bring it back!
I got 99 liquidation, but a bitch ain't one.
Been dancing with the market, playing death trap games. Every wick be a bullet with leverage in the name. Stops too tight, that's a hitman's treat. Market makers hunting wallets like wolves in the street. As the price goes up, liquidation stack below. Somebody's hitting the flow. Sweep them, they drag the candle down just to make the margin blow. Liquidation city, watch the funding overflow. And when the price dips low, liquidations rise above. Short sellers feel the fire like a sniper from above. This game is player versus player, ain't no love. Leverage trading ain't no playground, it's a war zone for the boat. I got 99 liquidations cause I over leverage my soul.
I got 99 liquidation, but a bitch ain't one.
Hey, run it up, I'm the king.
I got 99 liquidation, but a bitch ain't one.
Cut the leverage, cut the leverage, cut the leverage.
I got 99 liquidations, but a bitch ain't one.
Bounce back, let's go, let's go.
I got 99 liquidations, but a bitch ain't one.
Got liquidated Monday, liquidated Tuesday. Market wicked, portfolio spinning, getting sick. Long and pumps like a junkie, should've learned the first time. But greed is a demon in high leverage, making that portfolio drop. Market makers lurk like villains in the dark. Push it just $1 just to tear the trade apart. Price goes up, they load liquidation traps below. Stop hunts, beat the bullets and margin beat the dough. Price goes down, they spawn liquidation levels above. Shorts get clapped, thinking it's a bad dream, trying to wake up from a nap. Every candle is a trick, every wick is no fun, but still hitting the open trade like it owes me something, son. I got 99 liquidations, yeah, I'm still not done.
I got 99 liquidations, but a bitch ain't one.
Send it, send it.
I got 99 liquidations, but a bitch ain't one.
Margin call, baby, margin call.
I got 99 liquidations, but a bitch ain't one.
Hey, turn it up, turn it up.
I got 99 liquidations, but a bitch ain't one.
That's right, guys. 99 liquidations. Here we go. In 3, 2, and a 1. A bingo bango. I said bingo bango. Good morning, good afternoon, good evening, whatever time it is your time. It's always time to make this money. That's right, guys. No stepper today. No stepper. A couple excuses I can think of. One, I just ate about 30 minutes ago, but I'm not like super full, so that's not a really excuse. The other one is super cold and I don't want to sweat. That's really not an excuse either. Another one is, well, that's all the excuses I can think of. So no stepper today. We are doing sit down. We're doing sit down. Oh, another excuse is I'm in an active trade and I'm monitoring it right now. I'm looking at it go up and down, up and down. I'm hedge trading this actually. We're gonna go over that in just a moment. The coin is a Bitcoin. And we're gonna go over the thought process. I'm gonna start trading Bitcoin a little bit more. So just to let you know, of course, I do thank you for being here. Greatly appreciate you. If the background music is too loud, please let me know. I adjusted it just slightly, which I'm not even sure if you can hear it. If you cannot, let me know that as well, so we can get started. All right, so first up was Stregohart, my man. Thank you, Stregohart, for being here. You are the best and my favorite. You already know this, man. You're my favorite. Dude, you've been my favorite now for I don't know how many days in a row. You're killing it. Absolutely killing it. We got Crypto Candy in the house. My man, what's up, buddy? Greatly appreciate you being here. Thank you for showing your love and support for the channel. Thank you for showing your love and support to just, you know, doing what we do. We show you successful trades. We show you trades that we're learning from, because it's always a learning process. And Trader Geo, he says, I don't lose, I learn. And I told him, I was like, man, I'm gonna use that. So just to let you know, Trader Geo's, he says that, man, like he doesn't lose, he learns. And that's the part of it. Like every time we're doing a stop loss and we get stopped out, why? Was it the market? Was our stop loss too tight? Were we using too much leverage? We always have to analyze not only our wins, but our losses, especially our losses. So shout out to you, Crypto Candy. Appreciate you, man, being here. Thank you very much. T.I. Joe to the rescue. Show some love and support. Yes, smash the like, guys. Smash the like. Crypto Squid in the house. What's up, buddy? Appreciate you greatly. Once again, today, no stepper. We're just going to do a sit down. Again, I am doing an active trade, keeping an eye on it. I like watching my trades. I really do. That way I can adjust my thought process. And this is more of a scalp trade that may go into a swing trade, but I want to make sure it goes in the right direction. So we'll see how that goes. If you have any questions on your coins, let me know. I will write them down. If you have any questions on trading, whether it's indicators, strategies, just whatever, please ask. Once again, there are no dumb questions. They're either questions we've had before or haven't thought of yet. So let's go and get started, guys. We're looking at crypto bubbles on the daily. Ooh, not so good. We got Siren, whatever that is. This one has been moving both up and down the past several days. We also have River. Now, I know that these coins, I'm pretty sure they're very low market cap, which means that they can pump really easy, especially if a pump group gets behind them. And this is one thing that we always have to watch out for. Pump groups coming down and making the coin go up or down. So just to let you know. All right, let's look at the hourly time frame. Let's see here. Sound is nicely balanced. Thank you, my friend. Appreciate you very much. Local for crypto. What's up, buddy? Like smashed my homie. Thank you, man. Thank you very much. Donato. Appreciate you greatly. Appreciate you greatly. Let's see here. So on the hourly, ooh, we got some going up, but most are going down. Does this mean Bitcoin was going down and now possibly going up? We're going to find out in just a moment. Let's see here. I forgot what I had on this computer. The last time we looked at this, we were at 23%. And guess what? We're back there again. 23%. You know, we were at 26. Now we're at 23. Liquidations heat map. Let's see what this does. See if I need to refresh the page. We're going to go to the 24-hour time frame just for good luck. I'm going to adjust this due to our good buddy Al in JR's Discord to 0.5. And there it is. Lots of liquidations building to the top side. Why? People are shorting. People are entering shorts. They're putting their stop loss above the previous pivot. Some of them for a little bit, giving a little bit more cushion. Some with a little bit more cushion, a little bit more cushion, so on and so forth. As price comes down, liquidity is built to the top side. As price goes up, liquidity is built towards the downside. So this kind of gives me an estimate of which way the market is kind of leading to. And right now, the market is very, very short because it's not looking strong. Potentially, I mean, we'll find out in a moment. But just to let you know, because of that, we have people having their stop losses up here. Now, the market makers, they know exactly where your stop losses are at. So what they're going to do, potentially, they could come up for these areas of bright colors, which just means that the brighter it is, the higher or more liquidations there are. And those are all stop losses or just people being liquidated. So the chance of it coming up here are pretty good if we break this level. If we don't break this level, I mean, it's impossible for the price to go up without breaking the level. Now, just because it breaks the level, that does not mean it's going up to these areas. It just means we're closer. So it just kind of makes sense. All right, moving on. Let's go to the 12-hour time frame. On the 12-hour time frame, we can see this a little bit cleaner, where we have our levels here. Our first level is at 72,057, 41.99 million. Pretty much 42 million. It's sitting right here. Really close. Then we have 20.99 million sitting at 69,927. Which way is the price going to go? Nobody knows. I just know that it cannot go here without breaking this first. Just because it breaks it doesn't mean it's 100% going to go here. It just means that it's closer. So again, it just makes sense. All right, let's go to the 3-day, and then we're going to look at the weekly. Then we're going to look at Bitcoin, and I'm very excited to talk about Bitcoin. Look at all of this it took. Good Lord. It took a bunch of liquidations, a whole bunch. Let's see here, getting back to the chats. Let's see here, going to the chats. See here, Mr. Teddy, what's up? What's up? Appreciate you. Let's get that money, guys. Let's get that money. We got the magnets in the chat. We got magnets in the chat. I love it. Yes. More cushion for the pushing. You already know. Let's go. Let's go. Yes, indeed. Very, very true. Okay. You sent me to bed. Uh-oh. What's going on here? All right. Let's see here. Mr. Adamian says, Iran just blanked 9 countries tonight in response to their big natural gas. Uh-oh. Not good. Not good. Nice. Nice, nice. All right. So Al says, what's up, Al? We're just talking about you. Not sure if you heard that or not. But Al is one of the very valued members in JR's Discord. Very experienced trader, very knowledgeable trader, and he loves to give you information. So if you need information for free, join JR's Discord. And if there's any admins in here with JR's Discord link, please put it in the chat. I keep on forgetting to save it, but put it in the chat, and that way people can get it. Let's see here. Crypto Squid says, I'm here. Let's go. Let's go. All right. So let us look at the weekly. Let's go to the weekly for some giggles. Now in the weekly, this is what I was expecting multiple days ago when we were way up here. I wanted to see a big block here. And eventually the block did come. And of course we came down for it. Now, does it mean that it had to come? No, it didn't. It could have easily kept on going up. Just how it did here. You know, we had this area here. And at this time, I'm pretty sure there was a big block here. But the price just went up. So people stopped, either canceled their stop losses or they closed their trades because they went in profit. So that's another thing to take into account. Like these orders, they get canceled or they get closed out due to targets getting hit, trades getting closed. So when the price was up here doing this number, I was saying that, you know, I was really surprised that we didn't see blocks here. And this was done maybe like 4 or 5 days ago. And of course, now we see that there were blocks. We smashed right through it. And I was also saying, I think somewhere around here and then around here too. And now we can see that there's more liquidations coming down here as far as these stop losses. All right, so I'm checking a whole bunch of stuff right now. You can see my head going. I'm not freaking out or anything. I'm just looking at a bunch of stuff. All right, moving on. Let's go to a Bitcoin. We're gonna look at that in just a second. So for Bitcoin, this is our thought process. Last night, or was it a night ago? I don't even remember. So 2 nights ago, we were up here. 2 nights ago, we were up here. And I'm thinking, potentially, we could come down. Why? Joe, you don't have the RSI on your chart. You don't have money flow. You don't have any indicators. Well, guess what? Price went up. What happens? Price goes up. Price is going to come down. It doesn't mean that it has to come down right now. It could have continued going up and then come down. But it's going to come down eventually. And how far down it goes and when it stops and reverses, that's our job as traders to kind of estimate or guesstimate what might happen. Again, we're not predicting the future. We're just working on probabilities. Because price went up without indicators, without saying, oh, the RSI is really high or there's bearish divergence or anything. It's price went up. Just simplify it, guys. Simplify it. Price went up. Now, if you have divergence and if you have RSIs and you have all these other tools that just add to your confluence, great. For me, I can just see it. You know, price went up. It didn't go sideways. And I mean, it just went up. So because, and when we were right here at this point, I was saying that if we come down, you know, if we come up further, I was actually wanting to see it maybe coming up to here so that it could line up better with the area that I wanted to see it pull back to. But if it came up here, I want to see it pull back in this area. And I was just saying, man, wouldn't it be really cool if we came all the way up here so that my fib levels could match up? But since it started coming down, well, then we adjust our fib level. And the retracement that I wanted to see was 38%, which is from this entire move, 38% pullback, maybe 50%. Now, of course, all this is drawn out here. Now, this was drawn out several days ago. Again, 2 days ago, we drew this out. Did I know it was going to come down? Nope. Just probabilities. What happened? It came down. So it came down, and this is when we were here the next day. We were here, and I'm saying that, I still think it's going to come down. It may come down here, go up, come down. If it breaks this level, this is a video that I made for my VIP group. If we break this level, it's okay. If we come down to this area and we break this level, not good. Not good at all, because now we're in this zone. And we talked about this the other day too. Now, we could always start going up. Now, if it does pull back to this area and come up and break out of this purple zone, I am hecka bullish. I am super ultra hecka bullish, because not only did it retrace nice and healthy, but it broke the resistance wall. And now I am hecka bullish. So this is one thing that I'm looking for. Now, I do want to show this right here. Here is the 0.5 retracement. Now, if you pull the fib retracement from the low to the high, which this is how it's supposed to be done, everybody who's watching me right now, hopefully you're taking the hint, because I'm actually explaining how to draw a fib retracement from the low to the high to see where the possible retracement, hence the name fib retracement, where the possible retracement might be. Now, these numbers are very important. They're not just random numbers, they're percentages. That's why it's extremely important from the low to the high to see where it might pull back to. 38% pullback, 50% pullback, 61% pullback. If you draw it from the high to the low, watch what happens. From the high to the low. Watch what happens. These numbers flip. So if the price retraces to, let's just say, if the price retraced to here, is this 23% or is this 78%? The answer is 23%. It pulled back 23% of this move. So if you're drawing it from the high to the low and calling out it pulled back to the 786, this is incorrect. Granted, the number is correct, but the percentage is not correct. So please, if you're doing this, please don't do that, because you're confusing traders that don't know that these are percentages. And that's what these are. All right, moving on. So just to let you know, price came down to 382, 38% of this move. Came all the way down, tapped the 0.5. Not only that, but it also tapped our top of this zone. This zone, very important. So I got a lot of zones. And now, granted, the whole chart isn't full of zones, but these are important levels. And it literally tapped the top of this zone. And now, this is one of the levels before that we did not want to break. We did not want to break that. Let's say hi to the chats. Let's see here. I'm going down the list. Who's here, guys? Put a one in the chat. Put a one in the chat so I can give you a shout out. We got JR in the house. What's up, JR? Appreciate you, man. The man, the myth, the legend. Oh, let's go. Let's go. JR in the chat. Appreciate it. Let's see, Tuck him in. He's going 9 nights. Magnets. I love it. I love it. Duality C in the house. Duality C. Hello, everybody. I made it. Bingo bango. Let's go, guys. Let's freaking go. I love it. Good. Seeing ones in the chat. I appreciate that, guys, very much. We're going to break down Bitcoin and how I've been trading it. I'm going to break that down in just a second. So here, we're kind of, it's not looking like, I want to see this bounce. I really want to see this bounce. Right now, it is not looking strong. Not looking strong at all. 100% not looking strong. Could it fake me out and go up and do this after all? Sure, why not? So for me, it's all about strength of the move. What do I mean by strength? Well, we had it done. Okay, got it. We're kind of figuring that it might pull back to this area, and it did. And in order for this to be healthy, I would like to see, this is a pretty deep pullback, then come up, come down, come up to about 50% of this drop to come up here to now decide what is it going to do. Is it going to go up or is it going to come down? I don't know. But right now it went up, down, what it's doing is liquidating the shorts, people who entered way too late. Like this, I would never enter. And if I did, it would be scaling in, where I would, if I was going to do this, let's say I didn't enter way up here, which we pretty much called on YouTube. I would enter a little bit here, then it broke this level, then I would add to my entry. Then as it's coming down, I really wouldn't add anymore until it broke another pivot. Because now it moves so far down, I'm expecting it to come up to potentially see what it does. Does it break this? If so, then I can add to my short. If it comes up, hopefully I've been taking profit and I can move my stop into slight profit, get stopped out, and then try it again. All right, let me go ahead and delete this by doing Control Z multiple times. Holy smokes. Gamer plays 58 just became my favorite. Thank you, player. Appreciate you, man. Appreciate you greatly. Thank you for becoming my favorite. You are the best. And now my favorite. So thank you, man. Appreciate you. Now, just to let you know, this right here, incredibly weak. I don't like it at all. This wick right here and this wick right here, very, very mean to the people who are trading on a lower time frame. Here, they see this break, they enter, and what happens? It goes up a little bit and boop, stops them out. Where do they have their stop losses? They have their stop loss underneath the wick. Guess what it did? Stopped them out. Nasty. Nasty, nasty, nasty. And now it's kind of doing a range. So I'm not sure if y'all see that or not. Okay. Moving on. Oh, man. This one. And one thing that I don't like about ranges is that now it's creating liquidity or stop losses here. These stop losses got hit already. Boom. Stop losses here, stop losses here. And then some people are doing stop losses here. So everybody who's entering a short, here's their stop losses. Everybody who's entering a long, well, their stop loss was here and it got hit already. And now they have their stop loss here. And every time it comes down, because they're trading on a lower time frame, 1 minute, 3 minute. So they're seeing a bunch of stuff that we can't see on a higher time frame. And then they're adding here as well. So what the market makers can do, depending on which direction the market makers want to take it, what they could do, come up to get these, to come down to get these, to maybe come up and then trick everybody to where now they're entering more longs, only to come down and get these, to come up to get these. And when I'm saying these, it's stop losses. Hopefully that's pretty obvious, but these are stop losses. And then the direction that the market makers want to take it is what they'll do. So this is why I don't like ranges. I really don't like ranges. Control Z once again, several times, just to delete all this stuff. All right. So now how do I trade this? Well, for me, because I would like to see the price do this. I would like to see the price come up to here. Here's our blue level that we mentioned earlier. It's a key level to now pull back here, decision point. Are we gonna come up to attack this, or are we gonna roll over and attack this? This is what I'm waiting for. Now I'm actually in a hedge trade. I'm in a hedge trade to where I'm longing and shorting. So let's go ahead and look at my trade. So this was pretty much today. I took a little bit of profit, 20x leverage. So this to me is not bragging rights. I just showing that I took some profits. This is like, if I do a 20x, I usually like to show 20%, but it was just make sure I took some profit. That way I can move with my stop loss. And if the trade reverses on me, well, I still made money. Got stopped out in profit and I took some out. But what I want to show you is I started watching it here. So here's my thought process. And again, I'm showing you this all the time on YouTube. And if this happens, then great. Now here, this was last night. This was last night. Price was here. I'm thinking we're gonna come up to come down. Sure enough, we came up. Now we did come up a little bit higher than I would like. That we did. And this could have easily came down here and about this level, come up, And then now my short idea is invalid. This could have easily happened. However, my thought process is to where we come up, we come down, we end up coming up. I was taking this short. And then when it started coming up here, I was like, you know what? I'm just going to close it out. I'm going to close it out. You know, this might happen. If so, I'm saving some money because my stop loss is way up here. It doesn't get hit. In the morning, I'll just try to trade it. But I don't want to be in this trade not being able to see it. Sure enough, took a small loss. Sure enough, as soon as I did that, I think like right here, it started coming down. Broke this level. Good. These are all really tiny levels. Then I started doing this nice coming down, coming up. This was the trend lines that we talked about. Broke the trend line. Good. And now what I definitely don't want to see, I don't want to see this level being broken and maintain above. It's kind of like a zone. This is actually a really good zone. Let me show you what I'm looking at. So from here to here, see how this matches up? And that's why I like bringing it across. See how that matches up? So this is the zone we don't want to cross. We come up right to the zone, come back down, right to the zone. We come down, we break this level. This level's good for our short. If you were in it, if you know you took the trade from last night and you were in it and you saw the break of this, even better. We come down here. Guess what we're doing on this trend line? We're respecting the trend line. We come down. Now the level that I want to break is this level to continue my thought process on the short. Here's a level. See this? Man, I can't make this stuff up. Look at this wick. Boop. Right to it. Came up. Faked out people. Didn't close above the trend line. Didn't break above this. So the short idea is doing well. Then we come down. And this is my thought process. Boop. Coming down. Now, granted, I wake up in the morning. I've finished doing my errands. I see this like, crap. Bitcoin moved down 3+%. I was at 10x leverage. That would have been really, really beautiful for my trade. But like I said, I went ahead and closed out my trade early just in case. Again, I like looking at my trades. So price was here. I'm thinking from here, we're going to go up to either roll over or come up. Like, I don't know. Price is here. And I'm thinking, okay, let's see what happens. Does it break this? So if price came up, came down, came up from here, I'm thinking we're going to go up. And it starts coming down. Okay, I didn't enter the trade. I'm waiting for the break of this level. Didn't enter the trade. I see it coming down. It's like, oh, crap. Well, that's not good. It might break this and continue coming down. That, like, I want to see it at least come up to here, which I'm showing with this, you know, from this move. Came down, came up, started going up. I was like, all right, cool. It's looking nice. I was wanting to trade this, but I was talking. I was doing other stuff. I was checking out charts and everything. So by the time I look back at this, we're way down here. After this nice little dump, I see this, it's like, oh man, this is nice. I think it sounds like it's raining. I don't think it's raining. Let me check the chat. Okay, everybody's here. Just very happy that I did not put anybody to sleep. Now, if you like this thought process, put a 7 in the chat. If you think that all this is hogwash, because I don't even have indicators, put a 0. And if you put a 0, that is absolutely fine. It's fine. But I'm showing you price action. I'm showing you strength of the move. I'm showing you like how I trade and what I see. So when the price was here, I was like, oh, okay. Price came down. It has a nice wick. There's a chance that we might bounce off of this. So what I'm going to do is I'm going to long it. I tried to do a long, but it missed it by $30. It's like, dang it. Now, before I enter the trade, I did my path tool from here to here, coming down. Or it could come up, like, I don't know. So I tried to enter the long. By the time I entered, it had already passed. I was short $30. It's like, dang it. I don't FOMO, and it keeps on going up and up and up. I'm not FOMOing, I'm waiting, and it's, oh, okay. Price coming up here, I close out my trade for the long, and I wait. And it does this number. And it looks like it's gonna continue going, and rolled over. pretty much where I thought it might roll over. Again, without indicators. No indicators on my chart. This is what I have. This is what I'm trading with. And sure enough, it rolls over. So now I'm looking for a bounce right here. I'm looking for a bounce here. And at this, did I short here? I think I shorted here because I'm looking for this. I did a couple of trades. I think I shorted here, and very, very nice trade. Very nice trade. Then I'm looking for a long, and now price is coming up, but I'm thinking we're gonna roll over here. So I didn't enter the long yet. So I'm thinking we're gonna roll over here. So I'm waiting. I'm waiting to see what happens. Are we gonna roll over? Are we gonna come up? I don't know. So now we start coming up and we break this level. Okay, let me enter a long. So I entered the long, and then it goes and goes. Now what I'm looking for is I'm looking for this long to break this zone. The zone that we drew way back over here. Well, now I'm waiting for it to break out of it to confirm and have the thought process of, okay, it pulled back. Let's see if we could break through this, hopefully find support on it, continue up. Because once again, on the bigger picture, I'm looking for us to, I'm looking for us to bounce off of this 0.5 area. So this is the bigger picture. Now I can trade all the ups and downs on the smaller time frames that make up this bigger picture. So back to this, I'm thinking, okay, it's time to go up. Let's go. You know, before we roll over again, potentially. Then I enter the long. We come up here, we break right through it. It's like, oh man, beautiful. Here, I'm thinking we're going to at least pull back to maybe here to fight again. Now this was actually, let me just clone this. This was actually like right here. And so I'm thinking we're gonna pull back. So I enter my short. I still have my long, taking profit on my long, and we're coming up. Then we come back down. Then we come up. I was like, uh-oh. It didn't pull back like I thought it was gonna pull back. But the bigger picture is we're gonna pull back. So again, you have to have the bigger picture in mind and also the very small time frame. So then what I did is I just got this and I moved it over. So let's go and delete that. Then we're here. I was like, okay, here looks like a great opportunity for us to pull back to at least the 382, maybe the 0.5, 38%, maybe 50%, before maybe continuing up. And of course, I still have that to where if it rolls over, then not only did I take profit on my long and also move my stuffer. Let me see. Oh no. So if I get stopped out, I'm literally right around break even. Literally right around break even. Now what I wanted to do was I wanted to move this, and I had mentioned this earlier. I wanted to move this right here. But I was afraid that the price action might pull back to the 0.5, maybe a little bit lower, like a little wick. So I did not move my stop loss here, which would have stopped me out in slight profit, but then I'd be out of the long. And guess what? It would have stopped me out here. It would have stopped me out. So now, fast forward, we come down, we come up, we come down, we come up, we come down. Very boring. Very, very boring. This price action, I don't like. This I like. Up, down, up, down, up, down. I like this. Then now this segment of the price action, no, I don't like it. I like it for my short, because now the potential of it running out of gas, we have a high, and we have a lower high. We have this level right around here, to where if we maybe come up to roll over, now my short will more than likely come after this impulsive move or just nice move up, and then my short will print. I get stopped out of my long, already took profit, and that's okay. So that's what I'm looking at right now. That's what I have on my other chart. Let's see here. let me check the chat. Okay, we got ones in the chat for earlier to see if who was here. So I appreciate each and every one of you. Appreciate you, JR. Shep, appreciate you, man. Appreciate you greatly. Crypto Candy, appreciate you. Crypto Squid, appreciate you, man. Duality C, thank you very much. Stragerheart, appreciate you greatly. Degeneration X, appreciate you as well. Yes, you guys are very, very, very loved, and I appreciate you guys. The Ned in the house, what's up, Ned? Appreciate you. We got Bingos and Bangles in the chat. We got Melissa One Love in the chat as well. Thank you very much for being here. She goes, I'm late. Bingos and Bangles, absolutely love it. Absolutely love it. So that was pretty much my thought process on my long and my short. For the short, this is just to see if potentially, due to it not looking strong at all, looking for that potential rollover. But if we do come up, then I'm going to add to my short up here. So what is that, like 4% or something? 3%. So I'm looking at adding to my short right around here. And then more than likely I'll be out of my long, and more than likely it might come down. I don't know. But this is how I trade. And as you can see, these when the path tool is drawn, 60% of the time I am 100% accurate. I love it when George says that. 60% of the time I'm 100% or right. But yeah, so whenever I draw these path tools, usually I'm spot on. Usually. There are times where I'm way off. Here, I thought we were gonna go up. Nope, came down. Okay. This is the level I was thinking that we might reverse act. Sure enough, we came up here, we wicked in this area, and I started coming down. Here, I think we're gonna come down. We didn't. Eventually we did. And then we bounced here, we came up. So this right here, this up, down, up, that's this, up, down, up. But now we broke this level, oh crap, level 1. We broke slightly this level, oh crap, level 2, which could potentially mean where we do something like this. Where, and notice we were down here a few minutes ago. I was thinking we were gonna come up here, and we did, potentially, to maybe come down here, break this level to come and attack this. And when we started talking about this, we were around here and we came up. Now, could we continue going up and then, yeah, sure. But this is what I'm thinking. We might do. And if we do, my short's gonna play out nicely. If we come up, my stop will get stopped out for the long. But if we go up, well then my long is gonna continue playing nicely. Now for my long, what I'm looking at, and again, it's just a hedge trade. For my long, what I'm looking at is the break of 71.363, according to Blowfin, for me to be more confident in this long to where it's gonna play out to where we do this number, where we go up. And the area I'm looking for it to go to, hopefully, at least 72.892. So we'll see. We'll see. Now, if I was going to enter a trade right now, what would I do? If I was going to enter a trade right now, would I enter a trade? No. Because right now we're right in the middle of, let me take this off. Right now we're right in the middle of this range. And it's kind of it could go up, it could go down type scenario. I just know that if it breaks this level, 71.363, now the possibility for longs have just increased. If we break below this level down here, let's see right here. Oh, we got too many yellows now. Let's change this to white. Change this into white. So if we break above 71.363, be good for potential long. Not to, you know, $109 million, but just saying that we're going to go up before we roll over. If we break 70.930, then there's a good chance that we'll come down here and we might take this area. Let's go and just put the price. You see it right here, about 70.576. And that would just be like the first target for the short. But that's my thought process. Now, if you wanted to, we could do the fixed range volume profile for this itty bitty tiny range that we're in. And we can see that currently price action is above the value, or the point of control. And the point of control is slightly above our level that we are looking at. Then our value area high is up here where our other level that we're looking at, and our value area low is down here. Now, if we do an anchored VWAP, which I do like doing, make sure the magnitude is on, go from the absolute low, we can see that the anchored VWAP is slightly above. Now, granted, this is on the 3-minute time frame, so take that into account. So the lower time frame, the higher volatility, the more ups and downs, the more noise you're going to see. If you're doing this on a 15-minute time frame or an hour, you're not going to see all these ups and downs. So if this is too confusing, or let's just say you're doing the 3-minute time frame and you're using all these tools and you're getting stopped out way more than you would like, go to a higher time frame, 15-minute, hour, 4-hour, and use the same strategy, just at higher time frame, so that now your potential stop losses won't get hit as often. Not saying that they won't get hit, but not as often. But again, if you're entering sooner, well, then you have a chance of making more money. So 3-minute time frame, for me, that's what I like. Some people like the 1 minute, some people like other time frames. For me personally, I like the 3-minute. Depending on the coin, 3-minute, sometimes 15-minute. Sometimes we'll enter coins on the 1 hour, sometimes the 4 hour. So it just depends on the coin as well. And not only that, but you'll see what works best the more times you trade it. For example, let's say you're trading Solana or FETs or Turtle or Pepe or whatever, and you notice that you're entering the 1 hour time frame, but it's always, reversing on you. You think it's going to go up, but it always comes down. You're losing way more. Well, then now okay, for that coin, try a 4 hour and see if it improves your win rate. And then if it does, well, then keep on trading that on the 4 hour time frame. And then if the market changes and you're able to get in earlier, now let's say the 1 hour, and you're able to get in on the 1 hour, well, now you just made a little bit more money based off of the different type of market you're in. So we'll see. All right. Let's see here. Checking the list. JR says, Joe, you bloody legend. You're the best, JR. You are the best. Crypto Candy in the house. Everybody's still here. Very nice. Ned is still here. Appreciate you, man. Appreciate you. Yeah, y'all being here, y'all helping out in the chat. I mean, that really, really helps out, helps the algorithm. And hopefully more people can see the show. As a matter of fact, we had a new subscriber on the show, so I greatly appreciate them as well. And this is just showing like people that, you don't have to, here's the thing. With trading is very profitable to people who sell trading courses. And then these people, they make a lot of money showing you how to trade. Now, in my opinion, if you show people how to trade for free, and if they want access to like your top secrets or, stuff like that, then that's what they pay for. That's what they pay for. And there's so many people that are multimillionaires for showing people how to trade, but it's all stuff you can get on the internet. It really is. There's a lot of people out there that truly do have skills that aren't up there yet. But these people truly have skills. So like, watch people. I mean, we got JR in the house. We got Crypto Change Me. We have so many like extremely talented traders. Like, watch all these traders, see what they do, see how they trade and implement it. You know, see what works for you. Like, so maybe this, like, oh, it can't be that simple. You don't even have indicators. Okay, well, there are times where I use indicators. I just don't use them really to trade. But if I don't have them on my chart, I know people, he doesn't know how to trade. Here, fine, indicators. Do I need them? No. Do I use them sometimes? Sure. But I'm just letting you guys know, like, if anybody has like, let's say, so JR, he has a mentorship where it's a one-on-one, and he charges $50 right now. So get it while it's hot. He charges $50. That's it. You know, and if you don't have $50 to invest in yourself, ooh, like, you're gonna throw away in the market. You really are. So I'm not sure, JR, if you're still here, throw your Discord in the chat, that it can reach out to you. But if you don't have $50 to invest in yourself, and if nothing else, just see what he offers. Like, all right, man, here's $50. What do you got? And like, he'll show you, like, you will be surprised. So that's all I gotta say about that. Like, literally, like, you're gonna spend $50 on beer or whatever, lotto tickets, or like, invest it in your future, guys. And like, I mean it, I really do. So yeah, definitely reach out to him. Reach out to him. $50. Shoot. I wish when I was learning, I had somebody who wasn't trying to, you know, bend me over and show me the 50 states. Who knows that movie? Put it in the chat. That's not even a saying. Oh, it will be. Who knows that movie? Put it in the chat. But yeah, man, if you don't have $50 to invest in yourself, like, you're going to throw it away in the market and sell. And even if you do, if you know how to trade, see what he has to offer. Strongly recommend it. Strongly recommend it. All right. Let's see who's in the chat. Who's in the chat? Okay, let's see here. You Freddy. Bingo bango. Let's go. Bango bingo. Let's go. Let's see here. And the Dusty Hunt, my man. What's up, buddy? Appreciate you greatly being here. Camsta. Camsta in the house. See here. Very nice. See here. Very nice. Oh, cool. Look at that. JR is doing live orb trading in the Discord tomorrow. So again, JR's Discord. Now, granted, do I have a VIP Telegram group? Yes, I sure do. I sure do. I strongly recommend JR's Discord. You know, if you don't have money, or you just want to see what it is, JR's Discord. If you do have money and you want updates on my call outs and everything else, like, you don't need to join my VIP group to learn how to trade. You do that here. Like, I show you how to trade here. But if you want the updates to move your stop loss up, and this is the trade we're in, and blah, blah, then that's the VIP. But yeah, definitely do JR's thing. You got Dave P in the house. What's up, Dave P? Appreciate you, man. We're doing a sit down today because I'm in an active trade. Not only that, but there was a couple other excuses that I gave. But right now, I'm keeping an eye on my trade. See here. Going down the list. Ooh. Right. And that's 100% true. Like, there's a lot of stuff. Like, for me, and it's so funny. Like, people see my stuff, it's like, there's no way it can be that easy. I was like, dude, like, and people say, it's like, man, I don't mean offensive, but like, your stuff is like really simple. I said, good. That's how it's intended to be. Simple. I don't want it to be complicated or nothing like that. Like, all this stuff you can like literally learn if you just go to websites. Now, granted, it takes time, energy, everything. But like JR said, like, charging for the basics, like, that's POS stuff. And there's a lot of people out there that do that. A lot. And yeah, like, for me, I show you the basics and I show you some extra stuff, but I bunch it in with the basic stuff, so it doesn't overcomplicate things. And a lot of people they overcomplicate stuff. But yeah, in my opinion, I think you show more than the basics, JR. Just my humble opinion. I think you show more than the basics. I'll give you a heads up. But yeah, you do like really great work. But people get rich doing it. Yep, sure do. There's a lot that just do the basics. All right, cool. Unfortunately, I don't think. Oh, I'm over here. Let's see here. Let's see here. Checking for your link again. I saw it. Oh, here it is. There you go. Okay. Go back to the trades. All right. Let's see here. The net says hooked on phonics. Worked for me. Let's go. You're funny. See, I like a sit down, but I like a good stand. There you go. On an uptrend, I love a nice, strong morning wood. Let's freaking go. Yeah, so right now, I was thinking that we were going to get rejected here to come back down. And we're coming up a little bit higher. So now, let's see if we get a bounce off of this anchored VWAP. And then now the level that we're looking for to break is this one right here. So I'm always looking for pivots. And this is why I like looking and like monitoring my trades. So I can see, oh, it's gaining strength, or oh, it's losing strength. Which direction do I think it's gonna go now? But like I mentioned, I'm in the short, entered it here, thinking we're gonna come down. Nope, we went up. Okay, no problem. Waiting, coming down. All right, cool. Coming up, lower high. Okay, cool. And then now it's not looking strong. Not looking strong at all. In order for it to look strong, not only do we right now have to bounce off of this anchored VWAP, but we have to break this level, 71.363. But I wanted to go up for my long to continue playing, which would be this move right here to where we go up. But I can see at the moment it doesn't look strong. So right now I'm just kind of playing it both ways. Hedge trading, guys, hedge trading. Let's see here. Any questions, comments, concerns, issues? Let me know. Let me know as I get my drink of orange drink. Orange drink. You're like, Joe, you weren't even walking today. So good. So yummy. So yummy. Let's see here. So Bitcoin, I'm gonna start trading Bitcoin more. And a lot of people, they like trading Sol. And Sol and Bitcoin pretty much run together. I mean, they look almost the same. And when we were here on, I think it was last night, two nights ago, we were up here. I was looking for a potential pullback with maybe a bounce here. And sure enough, we did pull back. We bounced up, we came back down, bounced again, broke this level. Okay, cool. We came up here. What we don't want to do is we don't want to break this level. And we actually did this on the YouTube one. So let's go to the YouTube one really quick. YouTube. Solana. Bluffing. So this is what we're talking about. So when the price action was here, we were thinking that we may pull back. Hey, this looks different. Oh, I did my level different. It's more than likely a different time frame. I did it on 1 hour. I did actually up here. But anyway, we came down. And why did I do that different level though? Okay, I see all this right here. When I was on YouTube, I was looking at this level. That's what it is. And all these are just whichever one you want to pick. I mean, here's a zone, here's a level. There's also a level here. It's wherever we have more touches. But I'm thinking we're going to come down and then come up. And this actually is where the top of the other level's at. Let's just see. 93. So 93.12. Where I think it's going to bounce right here. 92. So yeah, this is where I thought we were going to bounce off of. Which would have been that other zone. And sure enough, we went, boop, came down. And now, not looking good. So here was, according to YouTube, the zone before we short. But this one's a little bit tighter. And because we dropped so hard, right now we're getting a bearish retest. For me personally, I would think that we would, and I think that we would do something like this, where we come up to about here before maybe losing it again. That's what I would think. Let's see. Let's see. Hey, what happened to me, Damien? And came in really quick and then left. So here, going to the list. Going to the list. Question. Where's the beef? Ha 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 ha. If you know that reference, you owed. Maybe London will continue the dump. Possible. Possible. Best bet, flip a coin, set a stop loss. Get wrecked. Yes. I'm listening. Just got a mean headache. Uh-oh. Not good. Try doing turn debase. Try doing, I think me Damien's drunk. He's at the club with the hot Latina. I know what he's doing right now. Try doing 10 things, maybe? I don't know. Turn debase. Oh, try doing trend base fib and see where the 2336 is at. The trend base fib. Trend base. So the trend base fib is this. It's also known as the fib extension. And so depending on how you would draw it, depends on where I would do mine. So let me kind of zoom out first a little bit. Okay. So I'm just confirming where I would have drawn it out from. And depending on where you draw yours from, depends on where the levels are going to be. What do I mean by that? For me, I'm going to draw mine here. This is the lowest point before the extension leg going up. Some people may do theirs here or even here. And there's 3 points to it. You have a low, you have a high, you have a low. And they may do it over here to show you what's already happened. Or they may do it from here to here to here to show you like levels that's already respected. What I'm going to do is I'm going to show it on this current one to see where the levels are at. So now the correct way to do a fib trend or a trend base fib extension, there's 3 points. So I always use the magnet tool. We go from the low of this current extension leg to the high to the low, which I'm going to do it like this. That way we can see it. Now, so what does this do? This gives us the potential targets to the upside. Now, if you wanted to do the potential targets to the downside, you could double click here, go to style, and you could put a negative in front of these numbers. Or a reverse? See how you do the reverse? So the reverse, low, high, low. Or you could go click here, and click here to get this. But this is showing you like for the downside. Like if you think it's going to come down, well then here you go. If you think it's going to go up, well then here you go. Just do it this way. So for me, you said the 2336. Okay, I don't think I have that low. I have the 236. That's probably what you meant to type. So for me, this would be underneath the resistance. So 1 hour. We do have this little zone. Tight little zone. There's a liquidity zone. Liquidations. Potential. It's in red. So this might be an area for... Oh, let me also do a fib retracement. Getting fancy with it, guys. Getting fancy. So notice I did it from the top to the bottom. Now the reason for that is to see where it might go up to potentially reverse. And that would be 0.5618 area. Here I'm thinking maybe pull up to the 0.5, but maybe come up a little bit higher. Let's see here. The Ned says, if I open the door and my dog goes out, I long. If he stays inside, I short in a bull market. Vice versa in the bear market. Get great risk reward. That's funny. My dog goes out, long. Stays inside, short. See, oh no, Joe, your 236 is at the bottom. You must have drawn it wrong. No, I never draw it wrong. Ever. I draw it the way it's supposed to be drawn. Or especially from what I'm looking for. But if you drew it from here, and the reason I made that clarification in the beginning, because I'm pretty sure you drew it backwards. From here to here to here, that's backwards. It's you could, I mean, do it from here to here to here, but so I'm assuming you're wanting it the other way around. I've never actually done this before because I've never had anybody who did it backwards. But let's go to reverse, and what I'm gonna do, say okay. What I'm gonna do is I'm gonna put my level right here. So this is where the 236 is. Now I'm gonna come over here to this and I'm put it the correct way. And then now I'm gonna draw it the incorrect way, in my opinion. So we're gonna go from low to high to low. Oh, it's actually wrong. So this 236 that I drew here, the correct way, it's actually 236 way down here. Interesting. And that's pretty much the same way as drawing your fib retracement from the low to the high versus the high to the low, how the numbers change. Ooh. I almost got stopped out of my long with that wick that just happened. Interesting. Dollar bills, yo. At me, Damien. Everybody knows how you say dollars. Everybody does it. Doganachi. Interesting. Let's delete that. So yeah, so I'm not sure, Damien, if you're left-handed, and that's why you always do everything backwards. But yeah, in my opinion, it's supposed to be from low. I didn't click it though. To high to low, where the pivot's at. And I guess if you're a lefty, you go the backwards. Low, high, or the pivot to the high to the low. But it's supposed to be low, high, pivot. That's how it's supposed to be. Low, high, pivot. So this is our pivot, This is our low. This is our high. The order of operation is low, high, dang it, pivot. Unless you're a lefty, then you go pivot, high, low. Wrong. My opinion. I could be completely wrong though. If you're in an uptrend, your 236 will be at the bottom. If you're in a downtrend, your 236 will be the top. There is no wrong or correct way. I do not concur. Now, I do agree with that though. If you're in up or downtrend, like you can draw it a different way, I guess. But yeah, I'm not sure. I'm not sure on that. So let's go to a 4 hour. So like I can understand your thought process of doing it backwards if you're in a downtrend, but are you doing it from way up here? But even here, it'd be, because now this is your high. So now, like I would have to do it just like how I would do the fib retracement from here to here to see where it come up to reverse because of the downtrend. So are you saying like this? I would agree with high to low to the pivot. This I would agree with. Are you doing it from way up here? If so, you should have said, Joe, zoom out. What are you doing, man? You're 2 zooms in. This I agree with. But the little area that I was trying to do, it wouldn't be from pivot to high to low. Here it's high, low, pivot. Because notice the pivot is the last thing we do. High, low, pivot, or low, high, pivot. Pivot's the last thing we do. Let's see here. Here. The Ned says, of course, he does everything backwards. How do you think he keeps planes on low unless staying away from radar detection? Whoa, you're making money for the Colombians. I forgot Joe is a Fibonacci expert, even if he doesn't use trend-based fib. My bad. No, I'm not an expert. I just know how to do it correctly. I mean, they're percentages, my friend. They're percentages. So you can't do a percentage the incorrect way unless you're looking for. But yeah, like we've had that discussion already, like a million times over. You do it incorrectly. I'm telling you right now. I'm trying to help you out. You do it incorrectly, and I showed you why too, because they're percentages. It's not just random numbers. They are percentages. Same thing with this. Like if like this, I would agree with, but I don't know if you're doing it like this though. Now, granted, could you pull it incorrectly and still be profitable? Yes. Yes, you can. Could you pull the fib extension and be incorrectly and be profitable? Yes, of course. But, I mean, I'm not an expert on this, and I could be wrong, but I do know that if you pull it from bottom to top, these percentages, matter of fact, let me show you. Let me show you. So let's just, for funsies. So y'all see these, right? I wish I could make these numbers bigger. You see these numbers, right? Now, let's do something for funsies. For here to here, let me go to the settings and actually put it to set of values, percentages. These are actual percentages. This is what I'm always talking about every single time. That's why it's extremely important to pull it the correct way, because if you have a move that went like this, and here is your pivot, and here is your pivot, you go from bottom to top to see the fib retracement tool, to see where it might retrace, hence the name, retracement tool, to see where it might retrace to. This number right here is 23%. This is extremely important because if you draw it the wrong way, which I always talk about, especially when Meet Damien's here, if you draw it the wrong way, the percentage that it comes down to is the 786 number, which is not correct. This is extremely important, and especially if you're teaching people who don't know how to trade and they go from top to bottom. This number, 786 number, yes, it's accurate. The number is accurate, but the number stands for something. It stands for percent. This is why I'm strongly stressing this every single time, especially when Damien comes in here, because this is vital. Pulling it from the bottom to the top to see what it retraces to. Now, granted, do I pull it from the top to the bottom? Yeah. Why? To see where it can continue coming down. I want to see it bounce. So this, if I ever draw it from top to bottom, not saying that that's incorrect, but you have to know what you're looking for. Let's say price did this number and it's starting to come down, and then now it's starting to bounce up. So now what I'm going to do is I'm going to see this high to this low to see now where can the price go to. The bounce, I'm looking for at least 38% to maybe 50% of this bounce before it maybe continues to roll over. If it breaks about 50%, well then now it's gaining momentum, and then more than likely we can go long. But this is extremely important. These numbers are not just numbers where you can say, oh, well, it pulled back to 786, or oh, it pulled back to 65 or 618. No, these numbers mean something. These are percentages. Hence the reason the fib retracement tool has the option for percents, because they are percentages. So hopefully that cleared everything up. I'm not an expert, but I know how to use this and what it's used for and how, and the more correct way to use it. Let's see here. Meet Damon says you shouldn't get held up on what's right or wrong with Fibonacci. If you're not doing this professionally in Wall Street, never seen a pro say this is wrong way to do Fibonacci's. Yeah, well, touche, my friend, touche. I live in a shack with candles, the little tea lights, because I can't afford the candles. I use tea lights for my electricity. But like, let me know if this made sense. Like, you know, all jokes aside, let me know if this makes sense. These numbers are important. These numbers are very important. 236 is not the same as 786. This is percentage. Hence the reason why the fib retracement tool has percentage as an option, because these are percentages of a retracement or a bounce, which I showed here. Like, I'm not saying I'm an expert. I'm just saying I know how to use these. And if this is the wrong way, I would love for anybody to explain how to use it and what it's used for. And these are percentages. That's what I got. Let's see here. Going down the list. Left-handed cigarettes. Yummy. What's 1% of one then? No idea. Not math. You're very welcome, my friend. Appreciate you. The golden pocket would be so far away, like equal distance away. No way. Yeah. Here is my handle. Here is my spout. Tip me over. Pour me out. Where is the 65? See, top to bottom, shorts. Bottom to top, longs. Plain and simple. Yep. Exactly. Not financial advice. And the Fibonacci is a new tool that wasn't used 60 years ago on Wall Street. Not like there's a Fibonacci school teaching people this stuff. So how are you the authority on what's right or wrong? Oh no, I just researched it. Like, so what is the Fibonacci? Who is Fibonacci? Who is Fibonacci? Fibonacci is a math genius. And psychology tells us that people, when a stock goes up, because they always talk about stocks, when stocks go up, the average for a pullback is 50%. The average. And like, don't believe me though. Don't believe me. Let's go here. I was watching JR earlier. Let's go to go to how to use Fibonacci retracement. Yeah, never believe me. Always DYOR. Do your own research. I love Investopedia. Investing, they try to sell you a lot of stuff. Investopedia tries to sell you stuff too. But let's go to Investopedia. Here, here's a good thing. So let's look this up together, because I could be completely wrong. So let's look it up together. Everybody who's here, put a 1 in the chat. If you're here, still put a 1. So what are Fibonacci retracement levels? What do they tell you? Let's see. So Fibonacci retracement levels derived from the Fibonacci sequence are used to identify potential support and resistance levels. Potential. These are not like it has to. These are potential. So there's a chance. Key percentages, very important, percentages. 23.6, 38.2, 50, 61.8, 78.6. Traders use these levels to place entry orders or stop losses levels and determine price targets, blah, blah, blah. Fibonacci retracement levels are often used with other technical analysis tools to improve trading strategies. Risk includes blah, blah, blah. So understanding Fibonacci retracement levels. We talked about the percentages already. And, oh, wait a minute. We did this before. And I was like, wait a minute. They have these backwards. I remember that. You remember that, me, Damien? I remember that. We did this already. And these are backwards. So this is not good. And I actually remember stopping myself like, wait a minute. That's not correct. Unless they're showing something. I don't understand what they're showing here. Common reversal levels. So to me, this is backwards. I remember that now. I'm trying to show you this, and then you're like, no, look at this. And I brought this up. I was like, well, maybe I was doing it wrong this whole time, but I don't think I am. Because it just makes sense. It's pulling back 23% versus how you draw it, which is 78%. To me, that doesn't make any sense. Like 0 cents. Let me see if that other one, because this to me is not correct. Even though I use this site a lot when I was learning. You remember that, me, Damien? Let's go to this other one. This is going to sell me a bunch of stuff. Okay, the sequences. Because I remember researching, and this one I don't remember doing when I was learning. Because then I would have been confused as well. This, I did not pull this up when I was learning. I pulled up, the dude's a mathematician, blah, blah, blah. Let's see here. The powerful tool of Fibonacci lies, mathematics, 13th century, Italian mathematician, okay, known as Fibonacci. So this part I knew about. Introduced to the world, number sequence. So this part I knew about. Then, of course, the ratios. Okay, so here's something. Look, key retracement levels. The retracement levels are the horizontal lines drawn on the chart, indicate where the price is likely to go, reverse, blah, blah. 23.6%, a very shallow pullback. So in order to get the pullback, you have to draw from the low to the high for a pullback. And it's saying shallow 23%, which only seems extremely strong parabolic moves. And this is what I call the FOMO level. That's what I call that level. 38.2, relatively shallow. Common pullbacks are just strong underlying momentum. This is what I say. We always want to see it pull back to at least the 382. 0.5 is what I really like. While not a true Fibonacci ratio, the 50% retracement is a psychological, remember I mentioned that word, psychological midpoint of the traders respect often include default on most charting software, 61%, blah, blah. So from the low to the high of this, it's where they stopped it. No, maybe I have been doing it wrong this whole time. That's, to me, that doesn't make any sense. How can they explain? So this is a question for everybody. How can they make it? How can this, a very shallow pullback of 23.6%, shallow pullback, and yet their 23% is way down here? That doesn't make any sense to me. Once again, you're saying things are wrong when an example Investopedia is showing you numbers the way I draw it. You're stuck in your ways, Joe. Stop saying it's wrong. It is wrong. You can do both. No, it depends on which way you're doing it. The fib retracement, man, it's a retracement. It's percentages. Like, these things are saying percentage, but here's another good example for your case that you're doing it right. But to me, make it make sense. So you're right on 2 occasions. And I'm man enough to say it. You're right on 2 occasions as far as the stuff that I'm trying to show to prove my case, and 2 times I am wrong. On the chart, you are correct. However, please make it make sense so I can change my ways. Here it's saying a very shallow pullback is 23%. So how can a very shallow pullback be 23% if your 23% is way down here? If you're drawing it from here to here, how can this be a very shallow pullback? Make it make sense. Identify the trend and swing. Trend direction, up, down. Trend direction. So I think this is what you're doing. But you're not doing a trend direction. You're doing it like, at least I don't think you're doing a trend direction. Like for me, this is not a trend direction. This is like the move. Like I do a trend direction, like the trend's coming down. I do it from high to low to see where it can continue going down. If it's, you know, going up, I'm doing this to see where it could potentially bounce and continue up. Ways depending on what you're trying to accomplish. Yeah, see if you're looking for a bounce or a retracement. It's the Joanachi. That's funny. I don't trust anyone's Nancy, but my wife's. 618 plus 318 equals 1. Nice. You guys are too smart for me. Smells like Teen Spirit. See here. Probably the golden ratio is 1.618. It's, yeah. Top to bottom for shorts, bottom to top for longs. Very true. Ratios are percentages. Yep. I don't understand why they're drawing it like this though. Because right here it just says that 23% is a very shallow retracement, but yet on their chart, their 23% would be way down here. That to me doesn't make any sense. So I have 2 places that are respectable places that show me Damien way of drawing it. And in my opinion, it's incorrect. But I have 2 respectable places that tell me that he is correct. So now I'm on a mission to find somebody or something that would show how to correctly do it, my correct way. Okay, let's ask ChatGPT. Okay, new chat. I know y'all can't see this, but hold on. Let's see here. Let's see how to correctly pull a fib retracement. What is a fib retracement? Telling traders what does it show? How do traders use it? When can the fib retracement be pulled from bottom to top? And when should it be pulled from top to bottom? And if this doesn't solve the final thing, then I don't know what will. Let's put this over here. Okay. So we're doing this together, guys. We're doing this together. Let's see here. Okay. Just keep doing fibs the way you're doing it. It's not that big of a deal. If it makes sense to you, it makes sense to you. Very true. Very true. Retrace versus extensions are relative. I'm just going to roll my eyes when you say I'm doing it wrong. You're doing it wrong. Now, granted, two very reputable websites showed illustrations of how you use it, which I completely disagree with. However, the verbiage on one of them was contradictory to the image. But now, let's see what ChatGPT says. What about 0.67? Uh-oh. And don't pay it too much attention. Let's see here. 23% from top is 78% from bottom. Very true. Very true. Here, dang and skipping. Fib training. Let's go. Big Buck in the house. What's up, man? Appreciate you. See, both are correct. It's relative. It depends on the percentage. Like, percentage is very important. See here. Till the golden pocket, it isn't the wrong spot. Here. Uh-oh. I just go topless. I'm not against personalizing stuff, though. If he trades it, it works. Happy for him. Yeah, it's the main thing is the percentages, though. Like, if he says that he pulls back to the 786, it's not pulling back to the 786 because the 786 is a percentage. So it's not pulling back 78%. It's pulling back to the number 786 due to his drawing, but the drawing is incorrect, in my opinion, because the pullback is not 78%. It's only 23%. That's where I have my issue. But yeah, and it depends on which way you're doing it. Bad Doggy in the house. What's up, Bad Doggy? Appreciate you, man, being here. We're doing some fib or retracement education. Now, granted, we have another experienced trader, Meet Damien, in the house as well. And he always draws it, in my opinion, incorrectly. We've looked at two websites, and the websites had illustrations that showed he is drawing it correctly. However, I have just disliked both those websites now because they're showing an incorrect drawing, in my opinion, because 23% is not the same as 78%. That's just me. Let's see here. But it will get an incorrect golden pocket and confuse new people. 100%. Yeah. Very true. See here. See here. I go commando. Whoa. New meaning. Oh my gosh. You guys are crazy. Okay. So let's see. A fib retracement is one of the most widely tools. Blah, blah, blah. Got it. Retracement. Okay. Here we go. You ready? A fib retracement measures how much price pulls back. Retraces after a move. This is what I always say. Retraces how far back it pulls back. Key points are these numbers. Okay. These levels are potential support resistance zones, which we talked about. What it tells traders when the buyers, let's see here. If price just made a move, strong move, how deep is the pullback before continuation? This is when you pull from bottom to top. This is what I talk about. It shows where buyers may step back in uptrend, where sellers may step back in a downtrend, areas of liquidity, plus institutional interest. So as the price is going up, we want to see where it might pull back to before it continues going up. This is pulling from bottom to top. This is what I always mention. How traders actually use it. Traders don't just draw it randomly. They combine it with structure. So entry zones, buy at blah blah. Okay, this is all okay. I don't care about this stuff. Combine it with this and that. Targets, okay, fine. When to pull bottom to top. Bullish fib. You draw low to high when the market is uptrending or going up. Use this when price is making higher highs and higher lows. You want to catch the pullback. This tells you where the price might, got to add that instead of will, where price might retrace before continuation higher. This is what I always mention. When to pull it from top to bottom. You draw from high to low when the market is trending down, or when the market, had a pretty steep come down and we're looking for a continuation to the downside. We want to see the bounce. You draw from the high to the low. Use this when price is making lower highs and lower lows. You want to catch a pullback sell, otherwise known as a bounce. What does this tell you? This tells you where the price might retrace or bounce before continuing lower. This is why it's extremely important to pull it, in my opinion, the correct way, whether from bottom to top or a retracement to see how far it will trace to before it bounces, continue to go up, or from top to bottom to see where it might bounce to before it continues the rollover. Most common mistakes, important. This is where and I've never used this before to ask about this. The information that I pulled before was information that I pulled like 5 years ago. And that stuff that I saw 5 years ago is not the same stuff I saw today, or the other day I was trying to prove my point when I was trying to show Meet Damien the stuff. But now people have moved the goalposts or updated their pictures to where it's not correct. Now, if you read the actual verbiage and look at the picture, that will confuse the heck out of you, because in one of the verbiage, it said pull back. 23% is extremely bullish. And I'm, doing kind of like the summary of what it said. But on the actual image, the 23% was all the way at the bottom. So that makes zero sense what the typing is versus what the actual image is. So here we go. Most common mistakes, important. This is where most traders mess up. Drawing fib on random candles. Yeah, so what you want to do is you want to draw the fibs at pivot points, where the price action goes up and it stops, where the price action goes down and it stops. So when it goes down and it stops, it goes up and it stops. These are areas where you want to do the fib retracement from. Now, if it looks like it's going to pivot and let me do it right here. If it looks like it's going to pivot, let's say it's doing something like this and it starts coming down, and you use your fib retracement from this area to this area, and let's say this was a pivot, and you think you put the fib retracement here, but then it continues to go up and up and up, and then it starts doing this. Now you get your fib retracement and you adjust it to the pivot to see where it could bounce from. So that's what I show. Ignoring market structure, using it in a consolidation or chop, you know, just up and down, up and down, up and down, not really doing any kind of higher highs or higher lows, not anchoring to a clear swing or swing low. So this, or swing high, swing low. So again, these are the pivots. So now I can continue using ChatGPT, because if this one was also done by the Matrix on how to wreck traders, then I'll be like, you know what, I'm done with ChatGPT. Now, for funsies, let's use this same information and let's do it for Grok. Let's do it for Grok. So let's go ahead and put that in there. Let's do it for here. And this is just for funsies now. Just doing this for funsies. I go back to doing trade. So hopefully y'all are still here. Put a 1 in the chat if you're still here. Put a 1 in the chat if you are still here. All right. Let's see who's still here. Okay. Okay. Ned says, maybe he flies planes in upside down world. Now, whenever I watched that show, Stranger Things, I only watched it because everybody at work was watching it, and I wanted to talk to them about this stuff. I was new to the company. That's the only reason I watched it. If it wasn't for them and me trying to, you know, talk to them about the series, I would have changed the channel in about 3 minutes. Yeah. That's just me. Bad Doggy says, I'm ready. Let's go. Let's see. The Ned says, you know, man, buy, high, sell. Oh, let's go. I do like to pull a fib in the opposite direction. Yeah. Well, you're getting the percentages wrong. Uh-oh. Let's go. How'd you pull it from top to bottom? Well, oh my gosh. I should have read it before. Uh-oh. Uh-oh. You guys are nuts. You funny though. You funny. Dina, you. Thank you, man. Appreciate you greatly. Appreciate you. The Ned says, doesn't matter. We get wrecked regardless. You're welcome. See here. Very nice. Very nice. All right. So I still have a few people in here. So according to Grok says it's a popular technique. We're not going to read all this. Just kind of summarize it. Look at this. I'm not using Grok. Swing low to swing high. How in the heck is this 38%? Maybe I am doing it wrong. Maybe Damien is right. How is this pullback 38%? This makes no sense at all. Can I click on this? So this person pulled it right. This is the first image I've seen correct. They pulled it from bottom to top. 23%, 38%, 50%. This is the first image I've seen correct. So this first website is incorrect. And I don't know Man, that's why all these traders have such a hard time. Like, I don't understand why they would have a swing low to swing high. They're showing it where you pull from the low to the high. And this is 61%, this is 50%, this is 38%. And these are percentages. They don't even have it as the numbers, they have it as percentages. How in the heck is this 61.8% retracement? That's why these traders are failing. Like, the stuff that I was doing 5 years ago was not this. This is crap. I'm sorry to be getting upset, guys, but this is crap. This is the first one I've seen correct. And the I've done this twice already, trying to prove Meet Damien is incorrect. And the first time I was like, oh man, this isn't the right way, but the image is showing the right way. So you want to identify a trend, swing low to swing high, use the most recent major impulses, zoom out if needed, that we can see the pivots. Okay, from one extreme to the other. This doesn't say from low to high. Display the key levels. The direction matters for proper orientation. 0 is at the start of the move. 100% would be the end. So this is the start of the move. This would be your 0. This would be your 100. So swing low to swing high. When to pull from the bottom to the top. Trend. Okay, when to pull. What did I say? Anything? After the price rallies for a swing, from a swing low to a swing high, from low to high, the fib levels will then act as potential support during pullbacks. Retracement. Example chart, correctly drawn fib, bottom swing low, top swing high in an uptrend. So our low to the high, this is 23%. So this is done correctly. And then we saw this one already. This one is done correctly as well. 23%. This is a pullback. So that's done correctly. So what I'm going to do is I'm going to copy this. Wait. And I'm going to say, please explain how a retracement from low to high according to this image. Please explain how the retracement from low to high would be 61%. This is a valid question too. 61% and under, and if price retraced more, would be a retracement level of 50%. That's a valid question. And then what I'm also going to do is I'm going to put this in this. And I'm going to go to this. Copy image. Paste. The image you showed shows a bullish uptrend scenario where price has made a strong upward move from swing low 0% to swing high 100%. I agree. This prior bullish impulse is labeled prior bullish movement. After reaching the swing high, when the price pulls back downward, a retracement correction against the larger uptrend, the white arrow points downward to the key retracement levels. They have these numbers backwards. These are... So if the price pulls back only a small percentage, it's a shallow level, 38%. If it pulls back more, it reaches 50%. You see how, y'all see this? This is saying what I believe to be correct. However, the image is incorrect. And me, Damien's not here for this. So if it pulls back more, deeper levels, a pullback reaches 61.8% level means the retracement, for example, right? So 68% or 61% is 61% of the move. And this is just dollar amount if you had $100. So 38% is shallow pullback, 50% is moderate, 61.8 is deep. Yeah. Okay, so the correct sequence for the price to fall during a pullback or a retracement, you know, we're starting at 100 because we go to 0 to 100. That's our top, and it's retracing, pull back. The first level, according to this schematic or whatever, it's 38.2%. Then it goes 50%. Then it goes 61.8. It doesn't go 78.6, 68.1.8. 0.5. It's not in that order the way Meet Damien does it, because that would be incorrect. It would be the way I do it, because that would be correct. So that's what this is showing here. The correct sequence for a retracement, a pullback, is this, the way I have it done. So now what I'm going to say, why would you show that image as a, no. So let's say, is this image correct or incorrect based off your explanation? Did I spell that right? Explanation. I always put an extra I in there. Explanation. Is this image correct or incorrect based off your explanation on how to properly draw a fib retracement to look for the potential, that's an I, potential. I'm gonna check the chat in just a second, guys. Fib retracement to look for a potential pullback. And then let me copy this image again. Is this image correct or incorrect based off your explanation on how to properly draw a fib retracement to, okay. Now let's see what the fib, this one says. Good question. This is exactly where a lot of traders get tripped up. Let's clear it up correctly. When you draw a fib from low to high, you're measuring how much of an uptrend the swing to give back a retracement downward. See what 61.8 actually means. Low to high, pull back at 60%. Okay, blah, blah. Yeah, we get that. Why is lower than 50%? No, that's not what I asked. Visual logic. So first drop is 38%, then 50%. So this is the correct order. So the order top to bottom is 38. So this is what I always show. We've gone over that. So let's go back to this. Copy. Y'all like that we're doing this, guys? Or not really? Y'all don't care. Check in the chat. Check in the chat. Man, good thing I wasn't walking today. Good Lord. Good Lord. It would have been a long stream. I would have done like 2 miles already. Man, but I didn't do 2 miles. Dang it. Okay. So let's see here. Me Damien says, ChatGPT was telling you what I was trying to say. It depends if you are in a uptrend or downtrend for your pivot points. No, because you always draw it from top to bottom. Like always. I've never seen you draw from bottom to top. And like I get it. It depends on what you're looking for. And that's why I always say that I draw it from bottom to top if I'm looking for a bounce, from top to bottom if I'm looking for a continuation down. Let's see here. Here. You do go high to low on downtrends, low to high in uptrends. See. Whatever you do, don't wipe wrong. Oh! Ah, Big Buck, you're the best. I've seen one dude, see, out of hundreds. Okay. I've seen one dude do it like that out of hundreds and more traders. But yeah. 2 people now. Fibonacci. Got low to high on an uptrend and high to low on a downtrend. I think you guys are just wording things differently and it's the same. Let's see here. It doesn't matter what Fibonacci says. See here. Okay, on the list. It's all good. Blah blah. Yep. Yeah. Bingo, GR. Bingo. Here. Very true. Very true. Okay. Oh my gosh. The move is 100%. If you retrace 38%, you're at 62% of the original height. That would make sense. See, but this doesn't say that. This doesn't say 32 point or 38.2% retracement, which is 61% or 61.8% of the move left. That doesn't say that. This is showing how Meet Damien draws it, which would give him the being correct, which in my opinion is not correct, because how can this be 61% of a retracement? Now, unless how you're saying it, it's 61% left of this move, that makes sense. And I never thought of it like that. But in my opinion, people aren't going to see 61% left. Like this, the fib retracement is not the fib, see how much is left of the move. It's the fib retracement. So it's how much did it retrace to? What percentage did it retrace? You know what I mean? Let's see here. Oh my, where's the soundboard? Uh-oh. Uh-oh. You done cracked the code. It was Joe. Oh no. Oh no. You guys are nuts. Oh no. I can hear the soundboard in my head right now. Damn, you still alive? Yeah, man. Sorry. My intuition says maybe. See here. Croc said he don't know. Whoa. What the F we talk about? That's funny. D-Generation X says, I'm a fib master. Ninja crew, a fib a training. Let's go. Let's go. Now, D-Generation X, since you're a fib master, is there a difference from drawing the fib retracement from the low to the high versus drawing it from the high to the low? If I'm trying to see where the price might retrace to based on it going up. If you're still in the chat, just let me know. Would you draw it using A? Or would you draw it using B? And everybody, if you can do that, let me know in the chat. For this move right here, you know, we were, and the rest of it doesn't even matter. We're looking at this current extension leg. Would you draw it from the low to the high to give you these numbers? Or would you draw it from the high to the low and get these numbers? Put A or B in the chat. Let me know, please. Let me know. D-Generation X, the fib master, the fibinaire, says he would do A. And for that reason, you are still my favorite, and I will still go for you for education, information, back and forth. If you would have said B, I would not listen to anything else you had to say. Just letting you know. Hands down, 100%, hands down. Just letting you know. Let's see who else does A or B. And if you say B, anybody else says B, that's fine. That's absolutely fine. For D-Generation X, dude is really smart. He has a lot of knowledge. He has a lot of years under his belt. Now, just because he's been in the game for a lot of years doesn't mean that like, he knows everything or he whatever. Like for me, I could be completely wrong, but the logic that I've explained, if it doesn't make sense to you, I cannot explain how a locked door locks. Like I can't, like I'm telling you, like it locks the door. It just does. Now, how did I get that example? I have no idea. I'm just trying to think of something simple. And if it doesn't make sense to you, you can't go in because the door's locked. Like this, like the retracement, hence the name, is to show you how much it might retrace to. Hence these numbers. These numbers mean percentages. Hence the settings. You can either do it in numbers or percentage. And if you do it from top to bottom for a retracement, no. Now, if we did it from here, top to bottom, we're looking for the potential bounce where it might go to before it continues going down. This is the huge difference. There are a lot of people out there that will draw it from top to bottom regardless of which direction it's in. And that's the point I make. This, in my opinion, is incorrect. This, from top to bottom, is correct because it's percentages for the bounce. All right. Joe, you beat the dead horse already. Okay. Chicken wing for the win. Let's go. And free pizza. Let's go. Picks. Let's go. If you can't fib retrace, you're gonna die with the trend base. Let's go. See here. I do high to low all the time to get fib extensions to the upside and give the audience some hopium. Okay. Man, I'm surprised you still hear me, Damien. It's like the longest you've been here. It's the longest stream I've done in a while, and you're still here. Very nice. Guess what? The 3-2 is a 6-1-8 either way. Yeah, we show that up here. But it's telling people, oh, it pulled back to 3-8-2, but, or I'm sorry, it pulled back to the 6-1-8, which the number's correct, but these numbers represent percentage. So like you could say, oh, the price pulled back to 386, which the number's correct, but these are percentages. So the price actually pulled back to 78% of the move, not 23%. Yeah. Then that says I'd go B to A, then back to A, then B, and end up at C. For fib retracement, draw from top to bottom. For fib retracement, let's see. For retracement, drawn from top to bottom. Me, wrong. See, Buck says A. Joe, I'm a purist at fibs though. Yeah, me, I just know how to draw them. Because they're percentages. Like to me, it doesn't make any sense draw from the top to the bottom and saying that, oh, it pulled back 23%. Like that doesn't make any sense. These are percentages. Hence the reason why we can put a percentage on these, because they're percentages. There's only one way. Uh-oh. See here. Retracement has to be chronological in order for smaller to go larger. Yep. To be retracement. Yep. Top to bottom for shorts. Yeah. Bottom to top for longs. Yeah. 100%. Yeah. Very true. So technically, the B option is a pull for a fib extension. See here, ascending up in order. Yeah. So as I mentioned earlier, like drawing from top to bottom, because we came down to see where it could bounce and get rejected. Like this is correct. This is the correct way to do it. Doing it from top to bottom here is incorrect because again, percentages. Okay. We've gone over that for too long already. Wow, guys, we did 2 hours. 2 hours. And if I had time, I would definitely chop up this video to make a bunch of shorts. But we'll see. I doubt I'll do it. But meet Damien if you are still here. Let me just for giggles, see what this says. The image you provided is incorrect. Boom. Mic drop. This is Grok. The image you provided is incorrect based on standard practices for drawing and labeling Fibonacci retracement in a bullish uptrend scenario, as explained previously. Boom. Here's why. Thank you, Grok. I can still use you. Let's go to the ChatGPT. ChatGPT says the image is misleading, partially incorrect for how Fibonacci retracement are actually used. Thank you very much. These two AIs I will continue to use because the image that it provided in the beginning when explaining fib retracements is misleading and we nailed it. 100%. That's all I got, guys. I do thank you very much. We'll see you in the next video. Make sure to tune in nightly, 9 p.m. Eastern Standard Time. We do this all over again. We go over Bitcoin, we go over your coins, we go over how to trade strategies. We go over indicators. We go over your charts. Here's the place where you can make money without investing your money. Again, none of this is financial advice. This is for entertainment purposes only. See you in the next one. Until then, as always, let's make this money. My name is Joe, also known as Trade Intuition. We'll see you next time. Take care. All right. I'm going to try to save that. We'll see. Oh my gosh. Ned says, can you explain Elliott waves? No, that I cannot. But Koenz can. K-O-E-N-Z. K-O-E-N-Z. It would have been 2 miles on the tread stepper. I know, man. I feel bad. Market makers will promote you for backwards things. Possible. But hopefully I can use that last part for a short video. But I do thank you guys very much. That's it for me. I'm kind of tired of talking already. I don't know who I could forward to. Let's see who's live right now. Maybe, hey, where did I go to this? Studios? Nope. You guys are the best. Y'all are still here. I'm really surprised. Like most of the stuff y'all already know. But we got Road Dog. Let's go to Road Dog. Hopefully we can continue watching him. I do thank you guys very much. Make sure to do Trade Intuition Raid. We'll see you guys in the next video. Until then, as always, my name is Joe. I'm here looking out for you. If I spot something that's incorrect, I will try my best to point it out. And we finally got to the very end. I appreciate you guys. If you haven't already, make sure to smash the like. Subscribe to the channel. And let's go to Road Dogg, support him, smash the like, subscribe to his channel, say Trade Intuition Raid. We'll see you next time, guys. Until then, as always, not sure what time it is your time, but it is always time to make this money. Let's do it. Take care, guys.
We in the charts again. Support line looks like it's holding. Market makers, make it bounce.